Which subject you are watching? Apart from DT? You are not doing law, na? Law lectures completed? Law lectures? So students, okay. So very good morning students to all of you. So let's start students in this particular context. So yesterday students, we have discussed the entire aspect of the charging section number 4. Today students will be a very important observation that we are going to make. We have seen that students, it is the total income of a person for a previous year is charged to tax in the next following assessment year. That is the mandate. So the focus point as far as the chargeability is concerned is the total income, isn't it? So therefore students, now we have to analyze what constitute total income. So in the first class, the charging section was being set out before all of you, and now students, it boils down to what constitute the total income. So students, in this case, here in point number 2, the total income. Now first of all, is it defined under the income tax law? And the answer is yes, it is defined, students. Now be careful, one more thing students. In the assessment year, may I put it in this way? In the assessment year, primarily, I told you students the steps which is involved in this context. Herein, I will be computing the tax liability. Computing the tax liability. Computing the tax liability, students. In this context, now in the case of this, students, I told you yesterday one very important point before I proceed further, because this important point I will not get any opportunity to discuss further in future. So let me discuss it right now only. Do you recall students, yesterday I told you one important point, which was, what is the earliest point of time when you can do the computation of the total income? What is the earliest point of time, students? 1st of April of the next financial year, or may I say students, or may I say it is the 1st April of the assessment year. So therefore students, the earliest point of time if somebody has to do the computation of the total income or the tax liability, then as early as 1st of April of the next financial year or 1st April of the assessment year, the computation of the tax liability can be done. The computation of the tax liability can be done. So in this particular context, students, what is the importance of this date? In the GST, students, or in the customs law, there is a concept of relevant date. Heard of it? Relevant date. Like I think in GST you have point of supply, and in customs duty there is in the customs law there is a relevant date concept. The date of determination of duty. Point of supply is also that point where the liability is freezed. Though the payment is to be done later on, but the liability gets freezed, isn't it? Relevant date is also the same concept. Here also, in income tax law also, students, there is a concept of relevant date. No students are aware of it. That's the beauty. And not only students, even the CAs are not aware of it. Students, you people have got previous year 22-23. Sorry. 23-24. Assessment year is 20. I am talking about for May 24, November 24 attempt. May 24, November 24 attempt, students. Now students, for all of you, May 24 and November 24. For all of you students, it is the Finance Act 2023 which is applicable. Which is applicable. Which is applicable. Okay. Finance Act 2023 in this particular context is applicable. Now, if are you aware, students? I'm not aware whether from interest you would have noticed that whenever the amendment they do, many amendment students I will take you through, and you will notice amendments which will happen. Many amendments that you will learn also. They will say with effect from what? From 1st of April 2024. Many amendments you will find it like this, which is applicable for an exam. With effect from 1st of April 2024. In this case, so with effect from 1st of April 2024, in this particular case, in this situation, students, one may argue, sir, what is the importance of this date? Why they are giving this date many a time? Because they know what is the importance of this date. This is a date which is the earliest time. This is the date which is earliest time to compute what? To compute the total income for previous year 23-24. All of you agree? Will all of you agree on this particular point? In this context, earliest time to compute the total income for previous year 23-24. In this regard, fine. All of you agree? So therefore, this is what. So what is important? So therefore, students, what does it imply? Therefore, in this case, when they are making the amendment with effect from 1st of April 2024, what does it imply? It implies that whatever is the law, whatever is, students, the law which is what? Which is enforceable. Enforceable means applicable as on 1st April 2024 shall be considered to compute the tax liability of the previous year. Which previous year? 23. Whatever is the law which is enforceable as on 1st April 2024 shall be considered to compute what, students? To compute the tax liability of the previous year 23-24, and therefore, students, please tell me, in this case, 1st April 2024 is your relevant date. Indeed, 1st April 2024 is your relevant date. So please understand, even direct tax law has also a relevant date. Just like your IDT of GST law, or for that matter your customs duty, which also has a relevant date. Here also we have the concept of relevant date in this context. All of you have copied this, students? All of you copied, students? Perfect. So now, students, this is the relevant date, and I told you already the importance and the relevance of this relevant date, students, in this context, isn't it? Students, now let's look upon to this. Now students, the second part therefore, now coming on this particular part, I think all of you have copied down this one. Computation of tax liability therefore students would be in this case as per, now you can we write now students after this discussion? Please write students over here. As per the law applicable, law applicable as on the relevant date. Now students, therefore in this case students, the tax liability that has to be computed, this tax liability students that has to be computed has to be between the two. What is the two? One is the total income and what is the other one? Is a rate of tax. Students, what is the second one? Rate of tax. This is a game. So students, in this particular context, students, the rate of tax, the two sources of rate of tax students, are you aware of that? From where you get the rate of tax students? From the Finance Act. One, all people have said it about the Finance Act, isn't it? In this particular context. Now tell me one thing, Finance Act is the source from where you get the rate in this regard. So now students, tell me one thing, long-term capital gains. A long-term capital gain students. Where exactly it is going to be taxed? An LTCG students? Anyone aware of the rate? 20% is the LTCG rate. Isn't it 20%? So in this particular case students, in this particular 20%, what about lottery winnings? What about the lottery winning students? 30%. Can you tell me which section students in this case there would be applicability that will be there in this regard? In which section there would be this applicability? 115 double B. And that 115 double B is under which act? Income Tax Act. Which means what students? We have got two source of rate of tax. There are two source of rate of tax students. And which are those two source? In this case, the first one is the special rate of tax. Special rate of tax. In this context, the second particular part which has been there, the second particular part students, if this would have been there, in this case what would have happened in this situation? In this case, yeah, special rate. Let's take an example. So some special income students, you can write special income special income in this context. Special income are charged to a special rate of tax are charged to a special rate of tax. Special income charged to a special rate of tax under the Income Tax Act. Under the Income Tax Act. Okay. Let's take the example students, which are the special income. Few important section at least to start off with, like short-term capital gains. Students, under section 111A, which is on the in the bracket you can write transfer of the securities, transfer of the shares in a listed stock exchange. At 15%. In this context, So therefore, next is students LTCG of 112A students. Many of you are aware, some of you may not be aware. Not an issue, students. At least write initially. LTCG under 112A 10%. LTCG 112A students 10%. So this is a 10% rate. Again, just write transfer of securities. You will say transfer of securities in a student instead of listed. Can you just correct it, students, please? In a recognized stock exchange. In a recognized stock exchange. Transfer of security in a recognized stock exchange. Okay, long-term capital gain, stock exchange. After that, students, another long-term capital gain, students, you may be aware, which is like real estate, any one thing which you sell, it is under 20% rate, students. Long-term capital gains under 112 it is 20%, and then the lottery winnings 115 double B, it is 30%. There are more sections students in finance you will read, you will learn as far as the personal rate of tax is concerned. And beautifully, students, in the non-resident taxation, there are many rates. And our taxation students, there are got many rates, students. In this particular context. So therefore, students, this is the point which has been there. Now, point number 2 in this regard. What is the second point? In this case, as you said it correctly, students, the Finance Act. Now, which Finance Act, students, you will refer it? Finance Act 2023 for your May 24, November 24 attempt. I already told you. It is the Finance Act 2023. Isn't it? It is the Finance Act 2023, students. Now, as far as the Finance Act 2023 is concerned, in this regard, students, be careful. You write over here, balance total income. Balance total income, students, taxable students, at the rate as per the Finance Act. Fine, students. Now I'll come on the total income part. Student. In few minutes from now, I shall be coming on the total income, students. In few minutes from now. So students, in this particular context, total income we'll be discussing, but students, here let me start with one of the most important amendment of the Finance Act 2023, which is in respect of individual taxation. And when I told you we are starting with the non-resident taxation, this is going to be applied heavily. Individual taxation. Can anyone who would have followed the budget, the last budget, can anyone tell me one of the most important amendment that has taken place for the individual taxation? What was that? Quickly, any particular guess? Even the online students can say. Any idea, students? Online students also. Fair enough, students. So the answer, indeed, some of, indeed students, some students have said it in this context. Yes, students, remember now, individual. Tell me one thing, in your interest here, students, if you can remember, what was the individual tax rate that you have applied? If you remember, in the individual tax rate, you have applied like this, that in this case, for individual, it was up to 2.5 lakhs, it was nil. Thereafter, from 2.5 lakhs to 5 lakhs, it was 5%. 5 lakhs to 10 lakhs, it was 20%. And 10 lakhs above, it was 30%. And recall, students, let's recall quickly. Let's recall this. Senior citizen. In senior citizen, what we used to do? Up to 3 lakhs, nil. 3 lakhs to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20. And 10 lakhs above, 30%. One more point. Super senior citizen, 80 years or above, 80 or above, up to 5 lakhs nil, 5 lakhs to 10 lakhs it is 20%, and 10 lakhs above it is 30%. All of you students will agree. Let's also recall, students, the surcharge part of it. Let's revise the surcharge part of it. And may I revise also some more things with all of you. First, surcharge. Students, for the individual, the surcharge, there are 4 rates of surcharge. And which are those 4 rates of surcharge? First one being 50 lakhs to 1 crore. I'll make you right, students. Don't worry. Today we will invest in individual taxation only. Why? Because in my non-resident taxation, which we will going to start in the 4th class or so, the 4th session, day after tomorrow, at that time you will come to know how important this concept that we are learning in our 2nd class will be. So, coming back, surcharge rate. Total income of the individual from 50 lakhs to 1 crore, it is 10%. It is 10%. From 1 crore to 2 crores, from 1 crore to 2 crores, it is 15%. 2 crores to 5 crores, it is 25%. And more than 5 crores, 37%. More than 5 crores, 37%. In this context, more than 5 crores, 37%. So therefore, students, in this particular context, the point which has been there is 37%. Students, that is the surcharge. More than 5 crores, total income more than 5 crores, 37%. Perfect, students. Can you tell me about the rebate part? There is a rebate of 87A which is given to the individual. Less than, or may I say up to 5 lakhs. If your total income is up to 5 lakhs, then the maximum rebate that you can get is how much rupees? 12,500. 12,500. And that exactly is the point. Okay. This is what students you all are aware so far as the provision is concerned. I hope that every one of you are now clear with this one. In this context, every one of you students are clear with this one in this particular context, isn't it? And that's exactly the point. Now let me come to a scheme of an alternate tax regime. So students over here, which we have discussed, please students, you have to be very careful. Why I'm saying so? In the last attempt I found, even in the last lecture of a regular batch, students were making these errors of surcharge in the old scheme and in the new scheme. There are different schemes. They were making error in the calculation. And please understand one thing, students, in final CA, the basic calculation, nobody is going to tolerate that you don't know this. Inter CA, you may get away with it. Also, in inter CA also, they don't tolerate it. But in final CA, just imagine the impression is so bad. You people are going to become a chartered accountant. And you're not aware of the basic rate. This is something the examiner will not give you the marks that you deserve even for the question for which you have answered very well. So some questions, students say, sir, my 4 questions I have answered it very well. Okay, but 2 questions you have solved in a way, such a way that the impression in the mind of the examiner has become very negative. And that is one thing, students, that we have to avoid at first place. So therefore, we have to be very careful on these basic things. Students, for just write a now a note here in this context, in the next page, write a note over here. So just try to talk about the individual taxation. Individual taxation. So just a brief note in the next page, if it is possible, please write in the next page. Individual taxation. And in the individual taxation, students, over here, as you know, even individual would be computing the total income. Individual taxation as per the old scheme, or in the bracket right now you will write, students, in the bracket you will write the optional scheme. The optional scheme. Okay, total income, and then thereafter rate of tax. So in this particular context, students, the rate of tax, the same thing. Over here, the rate of tax, one is a special rate of tax, special rate of tax, in this particular context, and again the balance rate, balance special rate of tax, and then thereafter the finance act, and then thereafter the finance act. Special rate of tax, students, in the income tax act, we are not going to repeat it again. In the income tax act, in the income tax act 1961. Now, as far as finance act is concerned, students, 2023, just put across 2023, students. In the finance act, students, herein from zero slab of the total income, slab of the total income, in this particular context, So slab of the total income, students, from 0 to 2.5 lakh, rate of tax is nil. 2,50,001 to 5 lakhs. It is 5%, students, quickly. 5 lakhs 1 to 10 lakhs. In this case, it is 20%, as you said correctly, friends. Thereafter, 10 lakhs 1 to the balance total income. 30%. So therefore, students, this is the case. Thereafter, students, right in this scenario, in this context, rebate 87A. In this case, what is this 87A? Up to total income up to rupees 5 lakhs. Please take note of a total income of rupees 5 lakhs. How much is the rebate, students, in this case? Maximum up to rupees 12,500. Now in this situation, surcharge. Okay, before that, in this case, students, as you all are aware, we can just write over here. Just put an asterisk later on in the note. I'll just give you. Okay, just put an asterisk there where 0 to 5, 2.5 lakhs. 0 to 2.5 lakhs. Put an asterisk and then in the note I'll give you. Surcharge, students, quickly hear it. So 10 lakhs in this situation. Oh, sorry, 50 lakhs greater than the total income, and total income is up to 1 crore. How much is the surcharge rate? 10%. Thereafter 1 crore total income up to 2 CR, 15%. This is 37%. All of you agree, students? Students, let's put this point over here. So here, right, in the case of senior citizen, in the case of senior citizen who is a resident person, underline the word resident. Why? In NR taxation, all these things is going to come. In the case of senior citizen who is a resident person, comma, the no sorry, who is a resident person, comma, no tax up to rupees 3 lakhs. Next line. In the case of super senior citizen, that is 80 years or above, that is 80 years or above, and a resident, in the previous year, no tax up to rupees 5 lakhs. Up to rupees 5 lakhs. Full stop. Okay. After that rate, I'm not giving it that everyone knows the rate. After 5 lakhs, it is 20%. Students, one more point. Huh? This rebate, students, can you see this rebate? Just next to that, right? Available only to resident individual. Individual HUF, you can write like this. So even this surcharge is applicable to the resident individual or the HUF. Fine, students? So now, students, this is all that you do. In this situation, the default scheme. This is what is the amendment, students. In this case, individual taxation. Now you write over here. Now, in this situation, the default scheme. Now, what is this default scheme? 115 BAC. Now, tell me, student, what is the default scheme? It means this, that now every individual, you people are giving a normal attempt, May 24. After the examination is over, then you will start filing the return of your client. Then you will see yourself into this default scheme only. You will not go for this one. This is optional scheme. What is optional scheme? Means you have to opt for the old scheme. You will have to opt for the old scheme, and that mandate you have to show in your ROI. In the return of income, students, when you file your return of income, in that ROI you have to show that I want to opt for the old scheme, and therefore that is how it would be. So accordingly, students, in this case, what happens over here? 115 BAC. In this situation, again the same thing. Total income. Total income, students. Now here, students, I must tell you one important thing. Over here, students, I will tell you one important thing. Here the total income you will learn as we proceed further. Be careful. Herein, point number 1. Few deductions of each head few deduction of each help is not available. Point number 2. In this context, point number 2. What is point number 2, students? Quickly. In this case, chapter 6 say deduction not available except few. Which are those few? You are curious, no? Students, sir, tell us what is that is not available. I'll tell you, students, but everything has its own time. Just now you write it. Chapter 6 say not available except few deductions. Be careful, students, all that thing. Now please come to the rate of tax. Rate of tax, students, in this case. Rate of tax in this situation, again the same thing. What is that? Special income. Indeed, at special rate. Special income, students, at special rate. Same thing. The rate in the Income Tax Act. In the Income Tax Act 1961. Now in this situation, on the balance total income, student, the rate under section 115 BAC on the balance total income, on the balance total income. Now what is the rate? Please copy down this important rate, all of you. Slab here, students, and the rate up to rupees 3 lakhs. Students, remember, in the those who would have done something last year, have you done for assessment year 23 24 anything for this? Up to rupees 3 lakhs, students. It is the earlier it was 2.5 lakhs. Up to rupees 3 lakhs, nil. Thereafter, students, the next one is more than 3 lakhs to total income, balance total income in this case is more than 3 lakhs up to 6 lakhs, isn't it? 6 lakhs. So up to 6 lakhs. So in this case, or put it this way, 3 lakh 1 to be just technically correct, students. At least let's not do it in this way. 3 lakh 1 to 6 lakhs. It is 5%, 5% only increase. Like the movie time is what, students? 3 to 6, 6 to 9, 9 to 12. These are the movie time, isn't it? Same way you remember it. The next one is what? 6 lakhs 1 to 9 lakhs, 10%, 15%. %20%, and then balance total income more than 15 lakhs, it is 30% now. So students, over here if you now see the next particular point, which is very important in this context, and what exactly it is in this situation, be careful. So more than 20 lakhs, more than 15 lakhs, it is 30%. Now students, the next question to all of you is, let me ask you first, rebate. Any idea, students, for the rebate part? Hmm? Rebate 87A, students, 87A rebate is applicable. They have made it applicable, And be careful, all of you. Please write like this. So students, over here, 87A, again, resident individual. So resident individual students. If the total income does not exceed, total income does not exceed rupees, no, 7 lakhs here. Just let me confirm one point. 7 lakh students over here. Be careful. This is a point which you have to be very careful about this. In this situation, students. Just a second. BUC. Yes, 7 lakhs. I was just thinking it is somewhere, some other case, 750. It is 7 lakhs. So if total income does not exceed rupees 7 lakh students, then the would be, rebate shall be maximum. How much? 25,000. Okay. And the beauty would be the next line, surcharge. Surcharge. Now friends, can you do one more thing? Can you put an asterisk over here also? All of you? This up to rupees 3 lakhs, you have taken as nil, isn't it? You just put an asterisk over here also. Now surcharge, students, that you will write over here would be careful. Same thing, students. 50 lakhs. The total income. 50 lakhs. The total income. Up to how much rupees? 1 crore. How much is that? 10%. Next is your 1 crore total income. Up to rupees 2 crores. 15%. Now see the beauty, students. See the beauty. Thereafter, students, 2 crores total income. So, students, in this context, you being in this context, this is what it is. You say, sir, but 37%? No, 37%. Okay. Now, student, that asterisk, put it over here. Now, can you see the difference between the two? Put it over here. Put an asterisk. The slab rate under the default regime, under the default regime is same whether a person is resident or non-resident. Whether a person is resident or non-resident, or whether he is a senior citizen, super senior citizen, super senior citizen, or otherwise. So this is what it is, students. Over here, and that exactly is a game. Fine, students. So students, this is what it is. Now, what is this default scheme? I told you, students. Now, be careful when you read the question on tax liability for individual. Tax liability for individual, students. When you read this, in that particular case, you will come to know, and just that they ask the question that compute the tax liability for this Mr. A. Then you have to follow this. You have to follow this, students. In fact, now they have to tell if you have to go as per the old one. Can you see this old one? This. If you have to go as per this, students, then what they have to say? If you have to go as per this, they have to say that this individual has opted for, this individual has opted for what? Opted for the old tax regime. So at least you need to get opt for. This opt for is very important. That option he has exercised. Then only this. Otherwise, if the question is plain that for this Mr. A, compute the tax liability. Please tell me, in that case, what you are going to do? Indeed. Yes. Then even the total income you have to compute. Even the total income, students, you have to compute as per what? As per this particular part. That is to say, how you will compute the total income? Each few deductions of each head is not available. You say, sir, which deduction is not available? We'll do in the heads. Don't worry, right? And the second one, students, is about what? Chapter 6A is not available except for a few deductions. You will say, but which deduction? I'm telling you, your curiosity is justified with, but just wait for some particular thing. Let me kick off. I just wanted to create a tool so that we will have a very meaningful and interlinked journey when I start off with what? With the heads of income, the non-resident taxation, which I'm going to take off now. So students, this is all about the rate of tax. So coming back, students, if you see, I have taken you through the rate of tax. So generally the rate of tax is, the rate of tax would be the special rate, on special income special rate, and on the balance total income the rate as per the Finance Act. Okay, we have seen right now, students, what we have seen for individual what will happen. But then there is a company, there is a partnership firm, there is a cooperative society. For them also the rates are there. We will see step by step for everyone. For everyone, whatever is the rate. But right now I just was focused on the individual part for all of you, just to tell you the story, what will happen for this individual. Is that point clear to all of you students? Every one of you students are clear with this one? Trinath, are you clear with this one, students? So students, with this particular part, we are through with this one, students, in this particular context. Can I ask you a question, students? What is the tax rate for a domestic, for a foreign company? If I have to ask you a question, at least students do one thing, one more thing. In fact, one more exercise, students. Rate of tax you have seen here. In the next page, students, rate of tax in this situation. Now, for a foreign company, it is 40%. All of you agree? 40% students, rate of tax for a foreign company. That is a general data. Because be careful. If I have to talk about for a foreign company, just write a note here in rate of tax. Just write a note itself. A note. Next note. In the next page. The next note in the next page, students. So in this context, if you all see, for a foreign company also, always keep in mind, because suddenly students, one thing is very much problem of many of the students, that the special rate of tax that we are learning right now, students, many students think that, sir, it is only for individual. No, students, it is not there. this is a very common mistake that many students do. As per many students, their thinking is like this, that the special rate of tax like long-term capital gains that we discussed, 111A, 112A, all these sections that we all have discussed just now. Many students are of the opinion that this is applicable only for individual and HUF. This is very wrong. If you are a company also, students, if you are a company also, in that case as well, the rate of tax will be what we are discussing it just. Same thing, students, in this context. So the rate of tax, if there is a special income, students, if there is a special income, in that case, the special income will be subject to a special rate. If there is a normal income, then in that case, it will be as per the 40%. The 40% is the Finance Act rate. So just write here in, students, foreign company rate of tax. Rate of tax. So please write special income at special rate. Special rate under I'll write act. Okay, you know which act? You write full, huh? So Income Tax Act 1961. Please write full. Income Tax Act 1961. I'll just write act, and then the second one, the balance total income as per the Finance Act 2023, and the rate, as you all are aware, is 40%. The rate, students, that you all are aware is 40%. Okay. Now, students, the surcharge part, keep that in mind for a foreign company. Surcharge would be 2% and 5%. It all depends on the total income. So if the total income exceed 1 crore, then the surcharge rate is 2%. 1 crore up to 10 crore. Or can we write like this if it is possible? Let's write this one. 1 crore, this thing, total income up to 10 crores. It is 2%. Now, second one is 10 crores. It is how much? Are you all clear with this one now? Every one of you. Fine, students? Perfect. Okay, students. Now, students, I was sorry for this particular part of this one, for this fluctuation of the timing. I had actually fever last night. I had a fever, but then I took the medicine. But they said that viral would be there. So therefore, I thought viral generally in the evening it starts. So climate change or something or whatever it be. I don't want to take a chance. Tomorrow, students, would be one more session on this total income part. Once that has been done, our entire basic structure of the income tax will be then through. Basic structure. And then I start with the non-resident taxation. So the basic structure, students, we will be done with it tomorrow. In the tomorrow's class, we all will be through with our basic structure. And then tomorrow, after that, students, we are going to start off with what? With a NR taxation from our fourth session. And that is what it would be. Students, one thing has been there. We will be doing a lot of practice of the questions, because practical is very important. Even the MCQs are based on the practical thing. ICAI, I'm telling you, students, all how much practically you are conversant, that will decide your ultimate execution in direct tax, ultimate scoring. I told you in the first class also, and in this one also, 3 modules I am giving it to all of you. First module would be NR taxation, international taxation. 250 to 300 pages is there. First, because it's also including black money. It is also including black money. Black money is also included in that. And believe me, students, I have left no stone unturned in preparation of the material. Best of your question set you are going to get it. Even 6C. In the old course, students, in the old course, we have 6C, elective paper, 6C. International taxation is there. What I did is, I have not taken the entire big questions. But what I've done, I have taken paragraphs. And I made a question. Because ICI material, so that paragraph, I thought it is such an important paragraph to make your concept crystal clear. I've done that. So you will find the best material, students, and I can assure to all of you, you don't have to refer anything else. Even ICI math will not be required, because I'm waiting for my when the third module will be given to you, students. By then ICI math will also be out. So I'm having a very keen watch on ICI math. Don't worry, everything is going to be covered. Only our class materials plus the charts which would be released somewhere in December, which I'll let you know. You can just very nominal per amount would be there for the charts, not that huge amount. So that will be told to you in December month. You buy that also, nominal amount. I'm telling you, it's not that it's going to be this thing. It's 100-page chart, full cover, and it will cover everything. And the YouTube revision, students, you are going to do it from that. So your revision is also taken care of. Test I am going to conduct for every module, module 1, module 2, module 3, and then finally 100 marks paper. Okay, so this is precisely the entire plan of the action, students. I want all of you to be committed on this particular part, and that is how, students, we are going to take it forward, our discussion. Fine, students. So I'll see you tomorrow in this situation, students. See you next, students, tomorrow in this case.